Hi, my name is Phil Mason-Cox. I'm Director of keysfp, a boutique financial planning practice. Today we're lucky enough to catch up with Stephen Hall from Stephen Hall & Associates to talk about business and business structures. In other words, when you're setting up a business, what are some of the structures you can utilise to ensure that you have asset protection as well as minimisation of taxation? Stephen, from your experience, can you give us an idea of the issues that should be considered when a small or medium-sized business is utilising different structures?
Okay, basically the main thing we come across in terms of structures is that there's a lack of understanding of what structure they're in to start with, but how that structure is actually benefiting them, and also as time goes on, the actual circumstances change in someone's life. So therefore, a structure that may have been suitable 10 years ago may not be suitable now because their situations change, and also the tax laws have changed as well.
Okay, Stephen, can you give us an example of a client you spoke to who didn't understand, the difference between a company and a trust structure and what that meant to them going forward?
Yeah, certainly in the last few years, there's certainly been some big changes in the way that, especially with trusts, the way that trust profits are treated, and in terms of what distributions trusts can make. And unless you've got an understanding of the changes in the laws associated with each structure, you may find yourself being in the wrong structure at the wrong time, and therefore you can be severely penalised tax-wise. A classic example of that is currently the changes to trust distribution laws in terms of distributing to minors, which is going to take effect this current taxation year.
Are structures only limited to the self-employed, or can they be used by any other taxpayer?
Basically, they're available to any person at all, as long as they're not used for tax avoidance purposes. The main reason, say for example, a high wealth individual would say have a trust, is for asset protection purposes. If they've got risk issues with their work, they'd hold their assets within the trust, they've got the asset protection value, also got the benefit of being able to distribute income according to the trust deed.
Stephen, what do you see as some of the mistakes that occur with small and medium-sized businesses when setting up their business structures?
The biggest mistake is having a preconceived idea of what they need. Each structure has different characteristics, has different tax implications, and every person's situation is different. So it's a matter of lining up the person's situation with the structure that's most appropriate for them.
We hope today raised some issues with you, and more importantly, you may have some questions that need answering. If so, we've made it very simple. All you need to do is click on the link marked "Book your key advice appointment," and we'll be in touch with you to organise a Skype interview.